As we approach the date of Tesla's S&P 500 inclusion, the stock has been going crazy. Tesla now has a market cap of over $500 billion, and they closed today at a new all-time high of $574 a share. And Tesla is maintaining the pace required for them to sell over 500,000 vehicles this year. Tesla had 5 profitable quarters in a row, and they were the only auto company to be profitable during the pandemic. On December 21st, Tesla is going to be included into the S&P 500. Is this the catalyst that's going to rocket the stock price of Tesla all the way to the moon and past $1,000 a share? We are going to discuss all of this and more, but please, before we get started, subscribe to my channel and hit that like button.
You can spend your money and keep it too.
2 months ago, I wore this hat and I made a video about how Tesla was having its worst day ever because it had been decided by the experts not to add Tesla into the S&P 500. Even though it met all of the qualifications at the time. I'll put a link right up there so you can check it out. I told you that it was only a matter of time before Tesla would be added into the S&P 500. And look, here we are today. Except this time, Tesla is actually really going to be added to the index. Before I get into what it means for Tesla to be added into the S&P 500, I want to make sure that everybody is on the same page. So I'm going to go over some basics and explain what the S&P 500 actually is. So put quite simply, the S&P 500 is an index that holds positions of the top 500 companies in the United States. These companies are not simply selected by market cap. There are various qualifications that each company has to meet in order to be selected as a member of the S&P. And even once your company has met all of the qualifications, there's still no guarantee that your company will be added to the index. The final step is that your company has to be voted into the S&P 500 by a committee. This committee kind of acts like a secret society in that we kind of have to accept the way that they vote without ever really hearing the reasoning behind why they vote the way that they do. The S&P 500 is a big deal, a really big deal. In fact, if you were to add up the value of all the companies in the S&P 500, it would come out to more than $27 trillion. Since the S&P 500 holds only the top 500 companies in the United States. It is very much like a stock market version of King of the Hill. When one company is added to the S&P 500, another gets knocked off. And anytime you have a new company being added to the group, the way that that company influences the group is primarily determined by its market cap. So the larger a company is, the more influence it has in the index. For example, right now, the top 4 companies in the S&P 500 are Apple, Amazon, Facebook, and Google. And if you add the market cap of all 4 of these companies together, by themselves, their market caps would equal 20% of the S&P 500. So if these 4 stocks go up or down, it can affect the index dramatically. Practically speaking, what this means is that when you invest $100 into the S&P 500, what you are actually doing is investing $20 into Apple, Amazon, Facebook, and Google. And now we come to index funds. And this is where things get really crazy because right now there is over $11 trillion in index funds that contain the S&P 500, which means that all of these index funds are going to have to allocate about 1.5% of their assets into Tesla. And even if they hate Elon Musk, they are all going to have to buy and hold shares of Tesla, which is going to create a huge base, long-term stability, and it's going to remove quite a bit of the volatility which has plagued this company for years. Index funds that track the S&P 500 have been recommended to long-term investors by the likes of Warren Buffett and John C. Bogle. In my opinion, I think that the committee put off including Tesla into the S&P 500 because they were sort of hoping that it would just go away. They're like, maybe we'll get lucky and the Tesla bubble will pop. And now they're facing a huge dilemma. They have never had to add a company the size of Tesla, and frankly, I don't think they know how to do it.
I think they're baffled. I really don't think they know how to handle this. What do you do? Well, look, Tesla's huge. It's set to be one of the biggest companies at $390 billion of market value to be added into the S&P 500. And of course, that's a disruptive event. Asset managers who track the benchmark would have to sell about $40 billion worth of other equities to make space for Tesla. So Dow Jones, S&P themselves have gone out to investors and said, hey, should we do this in 2 phases? They're looking for feedback right now to ease the transition of Tesla into the index. Of course, with that index comes about $11 trillion of passive investments because investors will have to track that index, will have to buy into Tesla. I should say with that, Elon Musk's wealth gets higher by $15 billion, surpassing Mark Zuckerberg to become the 3rd richest person in the world. I mean, what a week it's been for Elon Musk.
This video was filmed just 9 days ago, and in 9 little days, Tesla has added over $154 billion to its market cap. If Danny Berger on Bloomberg News was concerned about easing the transition of Tesla into the S&P 500 when the stock was $390 billion in size, what are they going to do now that the market cap of Tesla is over $500 billion? And by the way, Elon Musk is now the 2nd richest man in the world. So what happens when a stock is added to the S&P 500? Most of the time, it's not really that big of an event. On average, a stock will get about a 5% pop. Tesla is expected to pop quite a bit more than 5%. Just really a bump in the road. One benefit that S&P 500 stocks has is stability and legitimacy. Let's look at some historical data. These are examples of other companies that were added to the S&P 500. On this chart, the red dot represents the day that S&P inclusion was announced. The red line, the day that it was added. This chart was created to represent the average stock being added to the S&P 500. Notice how the stock price runs up quite a bit just before the S&P inclusion, and then drops back down almost to the level where it started at, before slowly starting to creep back up. Generally speaking, when trying to trade around an S&P 500 inclusion, what people try to do is they try to sell some shares right here at the top and then buy them back right here, if you can do it. So we have talked a bit about what happens to the average stock when it is included into the S&P 500. However, Tesla is not an average stock. There is no real way to predict what's going to happen with Tesla. It's just too huge. There are too many factors. If you are going to try to find a top on Tesla, what I recommend is this. Let's say you think this might be the top, and let's say you want to sell 5 shares. Sell in stages. Don't do it all at once. Tesla is too hard to predict. If you are undecided about whether to make a purchase or not, I always tend to err on the side of owning shares. Just some food for thought. Of course, I'm no expert, so please make up your own minds. This next thing is just massively huge for Tesla, and I haven't heard anybody talk about it at all, except for me. 2 months ago, I talked about it in this video when Tesla announced a $5 billion capital raise. Normally, when a company creates a capital raise, what they do is they wait till the share price of their stock is kind of high, and then they generate a massive amount of shares and sell them all at once, locking in that high price and creating instant liquidity for the company. Tesla does not do things like everybody else. What they did was they use an at-the-market offering program instead. This means that the banks will only sell shares at Tesla's direction. In other words, Tesla gets to pick when their shares are sold and how many. And when Tesla generated this capital raise 2 months ago, they got permission for up to $5 billion worth of shares. When all of those S&P 500 index funds are being forced to buy shares, Tesla is going to be selling them. Right up there at the peak, I bet. At who knows what price. Tesla is going to make a fortune. So we have one last major topic to talk about. And that is Tesla and the S&P 400. There's an S&P 400? Oh yeah, there's an S&P 400 all right. Tesla was never in the S&P 400. So Tesla is going to enter into the S&P 500 without being in the S&P 400 first. So every ETF and index is going to have to buy shares of Tesla without the luxury of S&P 400 making those shares available to the market first. It's difficult to even fathom what this is going to do to the stock price. I mean, Tesla's market cap is already over $500 billion. And if it maintains this trajectory, by the time the indexes and ETFs have to purchase Tesla stock, it's going to be like a short squeeze. Not only is this the largest company in history to be added to the index, there are no shares being made available from the S&P 400 because Tesla was never in the S&P 400. So what is this going to do for the stock price? Well, I made a prediction about that 2 months ago. So all the way back on September 4th, Tesla stock was $418 a share. And I predicted that when Tesla entered the S&P 500, now I don't like making predictions in the short term, but when this happens, Tesla's stock price going to $600 or $700 a share is not impossible. Looking at the stock price today, I'd say that prediction is pretty easily coming true. We have around 30 days to go till Tesla enters the S&P, and we're only like $26 short. If anything, my prediction was far too low. Even mainstream analysts are upping their price target for Tesla to $1,000 a share. So I'll go along with that. I don't usually make predictions about the stock price because I don't really care about what the price is doing in the short term. For me, knowing that the stock price is going much higher over time is really enough for me to design an investment strategy. But if I'm pressed and I have to make a prediction, I'll say that Tesla hits $1,000 before the end of the year and $3,000 within 4 years. And if my prediction seems crazy to you, I feel that it's only because you don't know what I know. My prediction is just a result of how bullish I am on Tesla's future. It is really difficult to explain the bull case of Tesla completely because the future of Tesla is chock full of catalysts. Full self-driving is coming in some kind of limited beta form before the end of this year. And this is much bigger than what most experts think. I mean, I think they're just going to be blindsided by this. Elon Musk has said that the value of Tesla is the value of all the cars they produce times the value of autonomy. Full self-driving is going to be worth trillions. Tesla Solar is still in its infancy. There are still 100 million roofs worldwide waiting for solar panels. Tesla Solar is going to be worth trillions. Tesla has invented an entirely new kind of battery, and their battery is cheaper to make, much more efficient, and much more powerful. Plus, Tesla owns the patent. And this battery is going to be a multiplier to all their other businesses. The Tesla battery storage business is worth trillions. Tesla has enough money right now to pay for all of their projects in cash if they want to. As crazy as that sounds, it's completely true. They have enough cash to go, here, build a gigafactory here. Here's some more cash. Here, we need 10,000 more superchargers over there. Here's the cash. And what that means is Tesla never has to tell us what they're working on, ever. Tesla's next secret project is worth trillions. I almost forgot to talk about Tesla's auto business. Tesla has begun a massive growth program and will be building charging stations and gigafactories all over the globe for the next decade. Tesla is reinventing the entire auto industry. Everything from how cars are built, sold, or even insured. It has been more than 10 years since Tesla has IPO'd, and we are still waiting for a Tesla killer. As far as I'm concerned, a Tesla killer is nothing more than a mythological beast, just like the Loch Ness Monster or Bigfoot. Because up until this day, there has not been another EV that has been able to match Tesla in features, price, and sales. The Tesla automotive business is worth trillions. So what do you think? Are you a Tesla investor? Are you looking to buy some shares? And if you have some shares, how many do you have? Are you going to try to sell some of your Tesla shares when the stock is up near the peak? I respond to all comments and truly appreciate the time it takes for you to write your thoughts down. Please leave your comments and suggestions below. If you are still watching and would like to support my channel, it's really easy and it won't cost you a cent. All you have to do is subscribe, ring the bell so you don't miss any of my content, and make sure that you hit that like button. Because every time you hit a like button, an angel gets its wings. Please do not buy or sell a stock just because an idiot like JC says to do so. He's just a YouTuber. He's got opinions. You need to make up your own mind. Go to the library, crack open some books. These decisions should be made by you. And whatever you do, make sure that you monster smash that like button. Raw!